Hey guys, Akil Stokes here. Welcome back to another trading video. Today, I'm going to show you how to use technical analysis to spot high quality trading opportunities in the market. We'll walk you through a simple price action and structure-based trade using something I call the combined technical score, or CTS strategy for short. It's a great tool to help you organize your thoughts and make a lot more sense of what you're seeing on the charts. So let's hop in. And if you're someone looking for a short trade, you've got a pretty interesting situation here, a structure-based short trade, because you got something else happening here too, right? What else do we have happening here, guys? What do you see? So yeah, we already know we have a 618 from the bigger move because we had this on the higher time frame as a Gartley. So you got a 618 Fibonacci retracement. What else? What else? What else? You got a rising channel. Good. What else? You got RSI overbought. Surprisingly, we don't have divergence, which is typically, well, maybe on a, I didn't go down to a 15, but maybe on a 15 you do. What else? What else? CTS. What else do we have? So we have, let's say, Fib Confluence. Confluence. We have rising channel. We have RSI OB. Chris says 1618 Fibonacci extension. So swing low to our swing high for our Fibonacci extension tool and back up. Yep, Fib Confluence. Now, for you CTS traders, well, I've worked with a few different traders. When I traded, I would always give myself 1 point if there's Fib Confluence. So whether there's one Fibonacci or 18,000 Fibonaccis, I would give myself still 1 point. I have worked with traders who have given themselves points for every Fibonacci as well. So I don't know if that's better or worse. Never tried it. Never really gave it any thought. But something to consider if you are a CTS trader, where it's like, hey, I give myself Fibonacci Confluence, or I give myself a point for maybe every Fib in general, or maybe I separate it for Fib extension and Fib retracement. Something that may be worth considering. I think one of the problems is with giving yourself more points, you maybe put yourself in a situation where you want to force a trade a little bit, right? So like if you know that you're missing some points, you start going back to like 1966 and drawing fibs out from there, and like you see like this weird 382 retracement from like forever ago. Like you go back to your chart and you're like, you know what? I don't even know if we're gonna get here on Aussie Canada. You start drawing it from like right here. And you're like, hey, look at that, 618. So that's but that's more of a self-control thing as well. All right, anything else, guys? Anything else we have here? What do you think? What do you think? What do you think? Anything else you think we may have? You want to experiment with? What else is in our deal here? Lower low, lower close. Yep, that's not going to be in our CTS, but that's a good entry reason if you're an aggressive enterer. And this was an aggressive entry right here. What else do we have? Volume is high in that level. Yeah, equal measure move. So let's measure that out. Let's see if we have an equal measure move, right? And again, for you guys that are CTS traders, this is why you literally have it on a checklist. You go through one at a time, right? So equal measure move. Let's add that. AB, someone might have wrote that earlier. I'm sorry. AB equals CD. I was answering a question where someone wrote that. Yeah, Carla wrote that in earlier. So AB equals CD. Psychological number E9150. Yeah, we've gotten above that now, but in real time, yeah, you can have that there. It's around that area. It's not quite there, but half point maybe. I don't know. Yeah. So what you do? There we go. Thank you. I wonder if you guys would get it. structure. Previous level of structure. Would you add a point for psychological numbers? I didn't have that in my CTS, but there's nothing wrong with doing it. I think they are powerful. I don't know if I would do 50s. If I would probably only do 0 zeros. But yeah, I don't see anything wrong with adding psychological numbers to the equation. So, decent CTS trade. I think you got enough reasons to build your score as high as you want it to be. Let's talk about the next two things you would want to look for, right? So we have our CTS, right? So we know that this is a trade that you are looking at. Next question is, where would your stops go? Yep, entry, stops, and targets, EST. Establish your parameters. Stops, obviously you have a rule for a stop loss. We'll just use what I use because we're not going to go through every single person's rules. I use a single period ATR. ATR is 9. So what I would do is I would go to our highest bar, which is right here, which is going to be 91.57. We're going to get 9 above that, which is going to be 66, root 66. That's going to give you a stop loss right there. Stop 1 times ATR, right? Kaboom. Now, this is usually the trickier one, is targets. So shoot me some levels that you guys would be interested in for targets. This is the one that often requires more analysis, which is why it's going to be more dynamic per trader. The previous high, let me delete some of this stuff to make it clearer for you. Previous high, right here, I'm assuming. I see 91.20s. I think everyone's looking in the same area. 90.39. We got one that's a little bit higher. 90.39. So let's put this in here as a level. 91.04. We got a little bit of a lower one too as well. 91.04 right here. Let me just scroll back up and make sure I didn't miss anything. Vladen says, do not use this chanting of settings to get a higher score. Changing of settings to get a higher score. Boom. All right. So there goes our areas of targets. And the next part is simple, right? Measure out your risk reward requirements. Now, if you were entering aggressively on this lower low, lower close right here, obviously you would have limited time to do this, and I'll show you a trick you can do in advance. But you're looking at this as being your entry right here. If you're shooting for the first target level, probably not going to get a great risk reward. So this is most likely be a no trade for you. If you're shooting for the lower level, you've got more than a 1-to-1, which could be good trade. If you're shooting for the even lower level, obviously you've got an even better risk reward, so a good trade. If you are someone that is waiting for, let's say, a double top, that's what I would like to see here. A trick you can use is this, right? Take your Fibonacci retracement, draw it from your stop loss to your target, or vice versa. Let's just take this one right here. 91.20 is the level I'm looking for personally. And then you can say that any entry above the 50%, right, would give me more than a 1-to-1. So if I get my reason for entry within this zone, then I am good to take the trade. Yay! If I get an entry reason that is below that zone, then I cannot take the trade. So now you've measured it out just to see in advance if or if not can you, if not if or if not can you, if or if you cannot, there we go, take the trade based on your risk reward requirements. So decent setup right here. Again, if you're super aggressive, you've got this lower low, lower close right there. That was supposed to be my entry. I missed it because I was getting kids ready for school, unfortunately. So I'm waiting for a double top now. And if we break and close above, then it's a different story, right? Then we can look for a continuation trade up to the advance. So unfortunately, I never got a second chance to enter the trade, and as you can see in front of you, it ran down to glory without me. I do need to mark it down as a trading mistake, even though it wasn't entirely my fault, but hey, I am human just like you guys. I make mistakes. I just don't make them that often. Anyway, I hope this provides a good example of how we can kind of organize our technical tools and use them to find high quality opportunities in the market. And again, if you ever want to join us in the live room, feel free. It's part of your risk-free 14-day trial membership. Just head over to www.tier1trading.com. Risk-free means there's no like sleazy auto bill or anything like that. After 14 days, your membership is just canceled. Like, subscribe, be ready for the next video, and until next time, plan your trade, trade your plan. Take care.